What's up guys, welcome back to my YouTube channel. It's Tomas. In this video, I'll go over all the trades you could have caught last week using the inversion for value gap model. I will explain the framework behind every single trade and show you guys why this setup is so good when you're using prop firms. Let's get right into it. Before we get into all the setups you could have caught this week, let me show you guys what is the inversion for value gap strategy. First, let's do the bearish scenario. We want to see a buy side liquidity pool formed and a bearish 15-minute for value gap right above this buy side. Then we want to wait for price to sweep this liquidity pool and enter inside this 15-minute bearish for value gap. Step 2, you want to make sure that you enter this 15-minute bearish for value gap aggressively by creating a bullish for value gap on the 1, 2, 3, or 5-minute chart. This fair value gap right here will tell you that there's a lot of potential aggressive buyers located inside this range, and if we're truly bullish, we should respect this fair value gap to create a new high. Then your last step is to wait for this fair value gap to get disrespected so you know that the buyers are being squeezed and that the sellers defended their position and they're the one controlling the market. So you go short at the close inside this inversion for value gap and you write it down for a 1-to-1 risk to reward ratio. This right here is exactly what your trade should look like. Now let's do the bullish scenario. We want to see a sell side liquidity pool being formed and a 15-minute bullish for value gap sitting right below this liquidity pool. Then you want to see price entering inside this 15-minute bullish for value gap and sweeping this sell side liquidity pool. Step 2, you want to make sure that you enter this bullish for value gap aggressively by creating a bearish for value gap on either the 1, 2, 3, or 5-minute chart, which will signal that there's a lot of aggressive sellers located right here on the lower time frame. So if we're truly bearish, we should respect this level to create a new low. In this scenario, you just entered a 15-minute bullish for value gap where you expect buyers on the higher time frame to defend their position. So you locate the sellers right here by using the 1, 2, 3, or 5-minute bearish for value gap. So then your last confirmation would be to wait for price to disrespect this level to get a possible long opportunity to the upside for a 1-to-1 risk to reward ratio. So as soon as you inverse this bearish for value gap right here, creating a bullish inversion, this is your confirmation to go long with your stop loss right below this level for a 1-to-1 risk to reward ratio for a reversal play. Here's the first example that happened on Monday, July 7th. So we have a possible short opportunity because we have a buy side liquidity pool right here, and we also have a 15-minute bearish for value gap sitting right above price. So if we can see price trade above this buy side liquidity pool and start rejecting it, creating an inversion for value gap, this is where we will potentially go short for reversal. Now my job is to go on the lower time frames to see what's the reaction once we sweep this buy side liquidity pool and tap into this bearish 15-minute for value gap. Right here we sweep it, but as you guys can see, we have a lot of fair value gaps inside this range. We have this one right here, this one right there, and this one at discount. So I do not want to engage with the 1-minute chart to locate where are my buyers inside this range. I want to go up to a 2, 3, or 5-minute chart to make sure that I'm looking at the right time frame to play the reversal. Now if I go on the 3-minute chart, I can see that I have a singular fair value gap from the leg that created the sweep, so from the swing low to the swing high, so I can trust the fact that the buyers are located between this candle's low and this candle's high on the 3-minute time frame. So as soon as I see price disrespecting this bullish for value gap, I know that this is my confirmation to go short, because if we are truly bullish, we should respect this fair value gap to create a new high. The last step is to wait for price to disrespect this bullish for value gap, and as soon as I have my confirmation, I will go short with my stop loss right above this candle's high, targeting the most recent low for a 1-to-1 risk to reward. So right here I will sell, stop loss right here, take profit at a 1-to-1, and let's see what price does. And in 1 minute, you hit your target. Here's the second trade you could have caught this week, which happened on Tuesday, July 8th. So right here, as you guys can see, we have a swing low right here, which acts as sell side liquidity, and we have a bullish 15-minute fair value gap sitting right below this level. So if we can see price entering this zone, so sweeping sell side and tapping into this 15-minute bullish fair value gap with aggression by creating a bearish fair value gap on the 1, 2, 3, or 5-minute chart, and then we see an inverse fair value gap right here, this is going to be my confirmation to play the reversal for a 1-to-1 risk to reward. Now I'm going to scale down to a 1-minute chart and see what's the reaction once we sweep this level. And right here, as you guys can see, we sweep this sell side liquidity pool, And as soon as we sweep it, we create a bearish fair value gap. So this level right here tells me that there's a lot of sellers located between this candle's high and this candle's low. So we entered into this higher time frame zone by seeing a lot of aggression from opposite participants. So we entered a bullish zone by creating a bearish fair value gap on the lower time frame, which signals that there's a lot of sellers right here inside this level. So if we are truly bearish, we should respect the bearish fair value gap to create a new low. But if we're bullish and the buyers are strong enough, we will disrespect this 1 minute fair value gap and we will see price going to the upside. So now my job is to wait for this fair value gap to get disrespected, and as soon as I see that, I will then go long right here. This is my confirmation to go long, stop loss right below this level, with a take profit being at the most recent high for a 1-to-1 risk to reward. So I will go long, stop loss right here, and take profit right above those highs. Let's take a look at what's gonna happen. And as you guys can see, in few minutes, I hit my target again. Right after I took this long, we had a possible short opportunity right here because we had a bearish fair value gap sitting above price. So then my job is to go on the 1 minute chart to see what's going to be the reaction once we enter the zone. So here we go, we are on the 1 minute chart and we just took that long. Now let's see what price is going to do once we sweep this internal high on the 1 minute chart and we tap into this bearish 15 minute fair value gap. So right here, as you guys can see, we enter this 15 minute bearish fair value gap by creating what? A bullish 1 minute fair value gap right here. So you guys can see we have a bullish 1 minute fair value gap. So right now I'm saying to myself, we entered into a bearish zone by seeing aggression from opposite participants. So we see aggression from the buyers inside a higher time frame bearish zone. So this is exactly what I want to see, because in the lower time frame, I can say to myself, if we are truly bullish, we should hold this level to create a new high. But now, if we are bearish and the sellers are strong enough inside this higher time frame bearish zone, we will see price disrespecting this bullish fair value gap, which will signal that price has way more chances of going back towards the most recent low for a 1-to-1 risk to reward. The last step is to wait for this bullish fair value gap to get disrespected, so I have the confirmation that the sellers are the one controlling the market. And right here, as soon as this candle closed, I know that the sellers are controlling the market and that the buyers are being squeezed. So I put my stop loss right above this candle's high and I go for a 1-to-1 risk to reward ratio to target the most recent low. So right here, this is where I would go short, stop loss right here, take profit right there. Let's take a look at what's going to happen. As you guys can see, in 3-4 minutes, we hit our target. Now let me go over the fourth trade you could have caught this week using the same exact strategy, and it happened on Wednesday, July 9th. So we have a buy side liquidity pool sitting right here on the 15-minute chart, and we also have a bearish fair value gap right above this buy side. We also have here this sell side liquidity pool, and just below it, we have a 15-minute bullish fair value gap. So what is my thought process? I'm telling myself that if price goes into this bearish 15-minute fair value gap and then we inverse a bullish fair value gap created on the 1, 2, 3, or 5-minute chart, I will go short for a 1-to-1 risk to reward. Same thing here. If we sweep the sell side liquidity pool first and then we react from it and we inverse a bearish fair value gap creating a bullish inversion, I will then go long for a 1-to-1 risk to reward ratio back to the upside. I just scaled down to the 2-minute chart. Let's see what's the reaction once we sweep one of these levels. So we swept buy side liquidity first and we created that bullish 2-minute fair value gap. So if we're truly bullish, we should respect this zone to create a new high. So my job is to play the shorts if we disrespect this bullish gap, which happened right here. So now this is my confirmation to go short, stop loss right above this high, targeting the most recent low for a 1-to-1. Right here, this is where I put my stop loss, take profit. Now let's take a look at what price is going to do. And as you guys can see, in 4 minutes, we hit our target. Here's the final trade you could have caught this week. We have a sell side liquidity pool, which is this low right here on the 15-minute chart. Just below it, we have a 15-minute bullish fair value gap, as you guys can see right here. So now I will go down to the lower time frames to see what's the reaction once we sweep this level. I just scaled down to a 1-minute chart and let me see the reaction once we sweep this level. And right here, this is where we sweep the sell side and tap into this 15-minute bullish fair value gap. Now I want to see if we entered by showing aggression from the opposite participants. And this is exactly what I see here on the 1 minute chart. We have a bearish fair value gap formed from this swing high to this swing low. So now if we are truly bearish, we should respect this level to create a new low. But if we're bullish, we will disrespect the zone, which will be our signal to go long for a 1-to-1 risk to reward. Now my job is to wait for price to disrespect this zone. And as soon as I see that we disrespected this zone, this is where I would go long, stop loss right below this low, and I would target the most recent high for a 1-to-1 risk to reward. So right here I buy, stop loss right below this level, take profit right here. Let's take a look at what price is going to do again. As you guys can see, in few minutes, we hit our target. Thank you guys so much for listening to this video. If you enjoyed, make sure to like and subscribe to my channel. For my new subscribers, make sure you tune in my live trading sessions, which happen on Wednesday, Thursday, Friday at 12:30 p.m. EST. And if you ever thought about buying a prop firm challenge, make sure to check out Tradeify. They have accounts where you don't even need to pass any evaluations. As soon as you pay, you're on the road to get your first payout. And make sure to use code AMAS for the highest discount and to get a higher win rate. Thank you guys so much, and I see you guys on the next one. Peace out.